Hey, what's up everybody? It is Thursday, August 29th. August is almost over. So, market up 300 points today. Look, let me tell you something. I hate being on the short side of the market. I know a lot of you love being on the short side of the market. You love when the market goes down. I don't know how many of you actually trade, but I know a lot of you just really want to see the market crash all the time. I'm the other way around. I hate being on the short side of the market because that is pretty much a losing proposition. The market rises over time because basically it is a growth function. It reflects the growth in the economy, the growth in corporate profits. Actually, at its base level, it just reflects the desire of people and firms to do better in their lives. And in a free and open society, relatively speaking, I guess we could say that, that's what's going to happen over time. So I do not like being short the market. Now, having said that, I mentioned some things that were of concern to me recently. One thing actually, and that was the slowdown in the rate of growth of government spending. You know, that's the core of what I do. Fiscal flows, that's the MMT concept. The government spends. It's like filling up a tank of water, okay? That spending flows to the income of the non-governmental sector. It expands the economy. Like, everybody has the whole deficit thing wrong. All of mainstream economics has that wrong. The media has that wrong. Most people have that wrong because they view that in the context of their own personal finances. But of course, people and firms and even states within the United States or entities like that, they are not currency issuers. When the government spends more then it takes away in taxes, there is a net addition in income to the non-government. Now, yeah, it's not all spread out equally, but it's like filling up a tank of water. One side of the tank goes down, that's the government side, becomes in deficit of water, and the other side goes up. So you don't hear that, and people get afraid when they hear stuff like that about the deficit. But anyway, so it's the core of what I look at, these fiscal flows. And I don't look at the deficit per se because that's just what's left over after the government spends and then removes in taxes. That's the savings, or a part of the savings, financial savings of the non-government sector. What I look at are the flows, not the stock, but the flows. All right, how much is it spending? At what rate? Now, the thing that bothered me was that recently, I would say in the last few weeks, we have seen that rate of spending really drop off. Now, there was an explanation, or there is at least a partial explanation for that, which I informed my subscribers about, and some of that will see some relief in September. But there was some additional deterioration in that spending rate. So I got a little bit cautious on the market. I got a little bit cautious on the economy. And again, I am very nervous. I know a lot of you love it when the market goes down, and that's all you talk about. And when the market goes down, you jump on here. The comments go through the roof. Ha ha, Mike, you were wrong. Ha ha, you told me to buy and it went down. Cry babies. And it always goes back up. I don't like being short. So we're still trading on headlines. If something develops, I will know. I track these numbers every single day. Every single day. The stuff I do is real time. Everybody else is looking at, they're looking at charts, which are, that's telling you what happened in the past. Hey, it broke a line. They're looking at data from 30 days ago or a quarter behind. I don't do that. I look at the real-time stuff, and as I said, it's all free and available. It's public information, the daily treasury statement. I have a course, $99. It explains everything. All right, we had a pullback in gold. I believe that's a buy there. We had oil prices rising above 56, as I said, yesterday, based on that EIA report. If I did my video yesterday, I think I mentioned that that was a very bullish report. And I also said that the elements in that report, namely demand, if you look at demand, not just here in the United States, gasoline demand was at an all-time record high, but if you look at U.S. exports of crude and petroleum product, it's flying out. So, I mean, if the rest of the world was going into recession, as all these headlines are blaring out, you wouldn't see that happening. And again, yesterday in my video, I said you would not see things like bank credit accelerating, not just making a nominal new high, but accelerating, loans and leases accelerating, consumer loans, auto loans, commercial and industrial loans, real estate loan. I mean, it goes down the list. Which brings us again to the bond market and interest rates, where I have gone over my explanation at least a million times. I'm not going to get into it again here today. So, I mean, like I said many times in the past, this is my approach is science. It's like physics. When there's a force applied, there is a reaction. The force is that spending force. I understand it through the understandings of MMT. Everybody else either A, doesn't understand it, or B, has it completely backwards. As in the spending, as in the deficit. They have it completely backwards. That's why they get it wrong all the time. So, again, with the correct understanding, the correct information, and the proper mental game, that's how it all works. That's how it all works. I mean, this is an easy thing to be involved in. The hard part is mastering yourself. Getting the information, getting the understanding, that doesn't take a lot of time. And the information's out there, it's free. I don't have to pay $20 million to, stick my server next to the data center for the CME out in Illinois or the New York Stock. I don't need to do that. I can beat those guys with free stuff. It's great, right? All right, that is it. See you tomorrow, folks.